On to some economic news now. And the retail sector confidence has increased to a 7-year high. Encouraging news considering the July looting and the COVID-19 third wave. The Bureau for Economic Research released the figures today, with retailer confidence up by 2 index points to 56 in the third quarter of 2021. And what's been driving these numbers? Let's unpack that with Economist Tshepo Moloi. Tshepo, many thanks for your time this evening. And I suppose a big question on everyone's minds would be, what is encouraging consumers to spend more despite the trying times?
Thank you very much for having me on the show, and a very good evening to your viewers. I think before we speak about the underlying drivers, I'd like to make 2 important points quickly to give us context about these results. Firstly is that the performance was not broad-based, meaning that confidence was not up across all retail categories. In fact, it was only mainly up amongst the non-durable retailers. These are guys selling food and mainly non-alcoholic beverages, and hardware retailers on the back of improved sales volumes in these categories. I think the second important point is that I think while the uptick in sentiment in the third quarter is certainly positive, retailers overall still faced a tough operating environment in the third quarter, given the factors you mentioned around COVID-19 and the looting. But when we look at the specific factors, starting with non-durable goods, certainly a number of factors boding well for the sector there. The first would be the 250 social relief of distress grants that were reintroduced in August. We know that these cash transfers often go to low-income households, and these households spend the bulk of their income on food and essential items. The second would be that I think relative to other categories, non-durable goods retailers certainly were affected the least by the looting. So even in instances where we saw looting of these stores, consumers were still able to divert their spending to other grocery outlets. Still linked to the looting, I'd also add that some retailers also benefited from consumer stockpiling amid fears that there might be supply shortages. Then when you look at the hardware retailer side, also a couple of factors boding well for the sector there. Amongst these, it's the pent-up demand or the DIY boom that we saw in the beginning of the year, given that people are working from home. That's certainly sustaining itself into the third quarter. But I think another big factor would be the mere fact that retailers are also optimistic about the mere fact that they might be cashing in on some of the repairs that are associated with the looting that you mentioned earlier on.
Right, and we're going to talk a little bit more about that boom that's happened as people work and study from home. But there have been a number of studies that have been done over the first few months, Tshepo, and based on engagements that you've had and previous research, how much of the spending is actually debt and not actual disposable debt income that people would have?
So it's a variety of factors, right? So we do know that in this current environment, it's the high income earners that are certainly boosting the sales of durable goods retailers, which would include hardware and furniture store, right? So, and this makes sense given that in this current environment, high income earners are certainly benefiting from a low interest rate environment. There's a stock market that's been trending up. We're also expecting better than expected dividends payouts in the third quarter. Rightfully so, you mentioned the issue about increased appetite for credit in this current environment. But most importantly, the segment of consumers would have accumulated savings from last year, especially in the absence of any international travel.
Yeah, and I'm glad you bring up those interest rates, because my next question to you was how important have those record low interest rates been for consumer behavior when it comes to spending?
They've been quite, the impact has been huge, right? So we also produce what is called the Consumer Confidence Index in partnership with FNB, which also showed in the third quarter that it is high income earners that remain optimistic about their finances in the current environment. And a huge part of that is the low interest rate environment that allows them to firstly pay up their debts quite quickly or cheaper, but also it frees up a bit of cash for them to spend on other consumer spending categories within the economy.
Right, and you mentioned this earlier, and I said we'd come back to it, but this idea that consumers are not spending too much on general food and beverages, but rather on non-durable goods, and this, of course, tying into that home improvement phenomenon that has come into play as people are forced to work from home. I mean, surely you've done some projections, and I mean, is this something that's set to continue over the short, medium, and long term?
So looking ahead in terms of the outlook for the sector, so in this survey, retailers essentially are telling us that they are pessimistic about the fourth quarter, which is understandable given that the country continues to grapple with the various waves of COVID-19. But there's also the lingering impact of the civil unrest that is projected to take another 18 months. But another big factor is the mere fact that we're also seeing global supply shortages that are having an impact not only in terms of raw material availability, but they are pushing prices quite high. And that's certainly not boding well for the retailers themselves. But from a consumer point of view, I do think that the fiscal support in the form of the social relief of distress grants, couple that with the July public sector wage agreement, combine these measures should add an estimated 40 billion towards the retail sector in the next 6 months or so.
Yeah, and we run out of time, Tshepo, but I have to ask you this. The economic outlook, the SARB is set to announce the interest rates this week. If they don't increase them now, they're probably going to do it later this year or early next year. Your thoughts on patterns based on what will come out of the SARB?
So our view as the BR is that we do recognize that there's the global phenomenon of higher prices or higher inflation internationally. And we're seeing a number of emerging markets also hiking interest rates in response to that. Our internal view is that given the current macroeconomic environment, inflation remains well contained, growth is still lagging in terms of recovery, and also given our pandemic trajectory, we do not think that the SARB should follow suit at this point in time. So we're not anticipating any rate hike in this week's pronouncements.